Investors and traders, welcome to the channel, Market Chart Pattern. Today is 6th of January 2024, and I hope everyone is having a great weekend. So in this video, something a little bit different. We are going to take a look at the gold market, and we are going to take a look at it from a really long-term chart pattern. About a year ago in February 2023, I done a similar video in which we looked at some really long-term ABCD one-to-one price projection patterns, which you may also like to affin with a cycle, and we are going to review that. And I also wanted to do this video more from an educational perspective as well, to show that how these cycles actually work in different markets. If you recall, about a couple of weeks ago, I done a video on a Bank of America in which I had shown different one-to-one price projections, these ABCD cycles run through that market, and another one is a gold market that we'll just take a look at that. As always, this video is for educational purposes only, and it is not a financial advice. So what we are looking at is a quarterly chart of the gold. This is a futures contract, and we are looking at the continuous futures contract going back as much data which we have available to us on TradingView. So now this chart is the continuous contract chart. Is constructed by the TradingView data. So we'll have to go with what we have, but what we're going to look at is, in my opinion, pretty exciting. So what I've done is I have gone as far as really long term. We go back to 1970s, and here what we are going to do is we just take a low. So for example, I take a low from the month of July 1976, and it was 1980, really long time ago. Believe it's about 44 years ago. A high was made in this market, so we just take that swing, call it the low A, the swing high as B, and we just mark it as this line segment in blue color. Now if we just copy this and we just come and pick up another low, so in fact this market went sideways to down for a very long period of time after topping in 1980, and it's really in the late 1990s, 1999, 2001, 2, where it really put in a low, and from 2002 it just began to accelerate to the upside. So we just take a low, and let's say if we just take a low from here, and we just see where do we land. And what happens is that it just takes us to a level which is around $1,000, a little bit above that. And this just goes and matches with the high which we had seen in the year 2008, when the great financial crisis was going on. So that's an interesting observation. So we just take this swing high, or we just take a low to high in the swing. We project it for another low, and what we see is a one-to-one price projection, or how we like to label it as an ABCD, taking us to a high in 2008. And one of the things about the gold market is, it's often perceived as a safe haven, but in fact what data tells us is that whenever there has been a recession, a really severe recession, the gold has actually declined early in that cycle, and it's only after that the gold has begun to actually accelerate to the upside, and that could be perhaps because of the easing in the monetary conditions, either through quantitative easing or aggressive interest rate cuts. So this is what we see in 2008 happening. If we just go back to dot-com era, 1999, 2000s, what we can see is in fact the gold reaching a peak around October 1999, that month, and what we see is gold price actually declining into 2001, and then it's really in 2002, somewhere beginning of that, end of 2001, the gold begins to accelerate, and we know that around 2003 that recession actually came to an end, stocks market started to rise. So that's another interesting observation, just by looking at these really long-term charts. Okay, so what do? We try to repeat, and we find a low from here. I've just chosen this low. It's very close to this low, so somewhere in that region. And then because these are quarterly charts, these are really long term, it's difficult to get a precise low, but it's in that ballpark figure. We take this to this high of 2008. We just copy this and we project it from this point C, which is in blue. And what do we have to do? Once we just copy this, let me actually try doing it with you right here just to illustrate this. Boom, and we get a level which is around 1481, and of course the market went a little bit higher. And if we just extend this and multiply this by 1.618, which is another Fibonacci number, so ratio, what we get is actually very close to where the exact top was. So sometimes, when these extensions happen, and when they usually happen, it's because there's a larger cycle which is in play, which might have pushed the prices higher. And, the shorter term cycle got extended. But because of the limited data that we have, it's difficult for me to actually find that one-to-one ABCD price cycle which might have actually done that. But we have seen enough of these ABCDs, and we know that sometimes the shorter term cycles actually extend. So this is where we got this top was. And now the other part that we are looking at is, if we look at this purple line here, and we take a low from here to this high and extend it from the low which came in early part of or around late 2015, early 2016, we see a price projection which could in fact see the gold price rise as high as 2700. And the other part is that before that there's another smaller cycle which actually I forgot to discuss, and that is this black line that we see. So if we just take this segment here, it's in green line, we label it as A, this low, green B. We project it from point C, which is labeled in green colored C, and we just project it, and what do we get? We see 2278. So it is likely that we are actually heading towards $2280 per troy ounce as a shorter term target. And we have other cycles as well. Now there's a bigger cycle which is in this purple line, which could in fact see the market go as high as 2700. And then we have this brown line which I've drawn. This is another ABCD which also sees the price in the vicinity of about 2675. So we have a confluence of two ABCDs completing nearby, fairly nearby, give or take about $100, because these are really long-term charts. So most likely 2600 to 2700 is the ballpark figure we are looking at where this market might actually be going. But before that, there are we discussed this 2280 level that could prove to be a shorter term target. We also have a 1.272 expansion of this BC swing in brown, which comes around 2230. So that might be a shorter term resistance level, or where the market could actually pull back from. And where we are at the moment is 2162. On the daily chart shorter term, I'll just show you in a little while. That's where this market has currently found some resistance, and is just pulling back from, and that is just the this purple BC swing that we see. If we expand it by 1.27 to Fibonacci ratio, we get this level. So I just wanted to do a quick video and also a recap of a video which was done about a year ago, how we are looking at from a really long-term perspective where the gold market might be going, and some sort of achievable targets that we can look at. So shorter term, 2280, and beyond that anywhere between 2600 to 2700. And for this to be valid, the shorter term target in particular, because we like to take a look at these projections ABCD. This low which came in around 1625, that remains to be held. If we begin to move below this, then the patterns that we're looking at, some of these will begin to change, and then we'll have to reassess, reevaluate, and see what the market is actually doing from a price action perspective. Now, just moving down to the daily chart really quickly. Here we go. Just trying to expand this here. So we see this 2152. That's the 1.272 expansion which I was talking about. That we are very close to that level. So really, from a longer term perspective, just going back to this long term chart, this is what we are looking at in terms of the gold market. Again, in our analysis, these point C's, they need to remain valid. If this point C is broken, then this analysis gets invalidated. The bigger ABCD is still there, but it means that the market is actually doing something different, and this brown one, the smaller one, will not be valid because the point C is broken. So we'll have to reevaluate that. But what we see at the moment is a pretty strong gold market, and of course the market could pull back first quarter, first half of the year. It's also possible. As long as the point C is valid, we are looking for 2280 shorter term, and even longer term anywhere between 2600 and 2700. So thank you very much for watching the video. Good luck and good trading, and have a fantastic weekend.